What's going on, family? What is up? What is up? What is up? Welcome to tonight's session with your boy Abel, part of the Prophet Society. We are super excited to be here with every single one of you guys tonight, family. If you guys can hear me, if you guys can see my screen, go ahead and drop a 3 in the chat one time real quick. Hey, make sure that everything is good to go. Because it's going to be a phenomenal week, family, man. I'm truly excited for this week that we have coming up. Just because it's another week that we're able to go ahead, man, and see what we can come up with, right? There is going to be a ton of news, though, for this week that we do have to be aware of, so we're going to go ahead and start off today's call with overall, just taking a look at the fundamentals, right? Seeing exactly what events are getting released, which ones we should be focused on, which ones are going to have the most impact, and also coming up with some type of a bias as well based off what the rumors currently are for these news releases, right? So, I personally love doing this because, I do rely on fundamentals a lot when I'm trading personally. So we have a lot of important news for this week, though, family. So I'm extremely excited for this week because it could be a very interesting week overall. In fact, I believe based off of the actual news events that we have this week, that can really dictate long-term direction for a lot of these assets, currencies, commodities that we actually trade, right? So, we're going to get into this as well, family, break it down a lot so that we're all on the same page for sure, right? But happy Easter to every single one of you guys. I appreciate all y'all that are with us tonight. And let's go ahead and get straight into it so we're not wasting too much time, family. So, obviously, we did have Easter today. Again, happy Easter to every single one of you guys. But tomorrow, guys, we still are going to be in a bank holiday for a lot of, major countries, right? We're talking about still going to be a bank holiday for the UK, Germany, Switzerland, France, Australia, New Zealand, the UK, United Kingdom, right? So there's still going to be, a lot of banks closed, going into Monday, family, right? So please be mindful of that, right? Whenever there's, a ton of banks closed, that could mean that there's not going to be that much volatility in the markets, right? Or that much volume in the markets, right? So the markets might not move as smoothly as you might expect it to. So it's always smart just to play it safe and be on the safe side. And even if you can't be on the safe side and you still want to trade during days that have this many bank holidays, then just lower your risk even more, right? Lower your risk. If you're risking 1%, risk half of that. If you're risking 2%, risk half of that, right? Lower your risk because you really don't know what the markets can actually end up doing, right? But overall, we do have, again, a ton of bank holidays for tomorrow, Monday, April 10th. Into Tuesday, guys, we really have nothing too crazy. But going into Wednesday is where the fireworks really start. Obviously with this, the big boy event that everybody's going to be paying attention to. Right now, I say everybody. I'm talking about all the top investors, the institutions, the hedge funds, everybody, right? Because this is going to be our next CPI release, right? CPI is one of those news events, guys, that, again, everybody is watching because it helps us, to see what's really going on with inflation, right? This is one of two inflationary indicators that we're able to look at and utilize to see what's going on. Now, as of right now, we currently are sitting at around 6% CPI year over year, which means, right, the cost of our goods and services that we buy on a daily basis, the cost of those have gone up 6% from the previous year, from this year to the previous year. That's pretty crazy, right? To see, things move up in price that fast, especially when our wages are nowhere near as fast as that. Right, that's a problem, right? So inflation is still the main objective overall that the Fed and the government is trying to still fight. And this is going to be the next gauge that helps us to see if everything that they have been doing with raising interest rates, reducing the balance sheet, right? We're going to see if that's actually helping, right? If it's actually still doing what it's supposed to be doing. We have been on a downwards trend with CPI over the past 6 months, which is amazing. But we still got a long ways to go to get to that 2% level, right? So it's going to be interesting to see, guys, exactly what comes out on Wednesday. Obviously, we will be live with our premium community. So if you guys are all a part of the premium family, appreciate you guys. Love y'all, right? But you guys know we will be live as well early. We'll probably go about 30 minutes early for that session just so that we are all prepared. And we'll be able to see exactly what CPI does come out as, right? So as of right now, it's at 6%. They're expecting it to drop, right? The rumor is that it's going to drop to 5.2%. That's a big drop in CPI. So if the rumor does come out true, family, right? And if we do come out below 6%, right? If we come out at 5.2%, then that's going to bring a lot of optimism back into the markets. Why? Because now inflation is dropping even faster. CPI is dropping even faster. And this is only going to give it more reason for the Fed to actually pause interest rates. Okay, so yeah, if it does come out as what's being predicted right now, right, which is to come out at 5.2%, then we're probably going to see the dollar take a nosedive. The dollar's probably going to lose value. And we should see the stock market gain strength. We should see indices gain strength. We should see foreign currencies gain strength. We should see cryptos gain strength. Because we're going to be going to more of a risk-on type of sentiment, right? A risk-on type of environment where there's optimism in the marketplace. And whenever we have a lot of optimism, people are more inclined to go ahead and start looking for investments to park their money into, right? So that's if it comes out at 5.2%. If it doesn't and we miss and it comes out much higher at around the 6% that we were just at or higher, then the flip side is going to happen, right? There's going to be a lot of fear, uncertainty, and doubt in the market if this comes out 6% or higher. Anything lower is technically good, but if we come out right at forecasted and we do this big of a drop, then yeah, be prepared for a lot of excitement for this week, right? Especially if you're leaning towards risk-on type of excitement overall, right? So that's very interesting, family, that I'm excited to see what we can actually come up with going into this week for sure. Okay, so let's see what you guys are talking about in the chat really quickly. I appreciate all you guys for tuning in. Happy Easter, George, to you as well. What's going on, Warren, out there in Trinidad? I appreciate you. Let's see. I'm looking at U.S. oil sell positions, trying to look to fill that fat imbalance. Nice. Yeah, I'll take a dabble. I'll take a look at U.S. oil in a second. All right. One thing as well, family, before we go ahead and continue moving forward, I want you guys to go ahead and smash the like button one time. Smash that like button for us, guys. We do appreciate every single one of y'all that does it because it does help us out tremendously. Right? Absolutely helps us out tremendously. Right? So please go ahead and smash the like button one time. And thank you ahead of time for those of you guys that do go ahead and do so. Right? But that is pretty much what we're dealing with, or at least a big event on Wednesday. But we also have a lot more events, guys, on Wednesday as well. Right? We also have the Bank of Canada with their monetary policy report. The Bank of Canada also releasing their interest rate decision. They're expecting it to actually remain the same. They're not going to raise rates or lower rates. Right? They're expected to not even do anything with their rates. Interesting. And then we have the press conference that follows that. Right? So I know Kyle absolutely loves trading CAD pairs, so this is going to be an interesting week for the CAD pairs, man, depending on what actually comes out based off of these releases overall. Now, we also do have FOMC meeting minutes on Wednesday as well, right, which is, again, another big boy event. FOMC meeting minutes allows us to see pretty much what the members of the Federal Reserve are actually talking about, right? It allows us to see what their vision is, what their perspective is, and we're able to come up with our own perspective based off what they're saying, right? So, again, the FOMC meeting minutes is also going to be very interesting just to see how it actually ends up coming out. Now, going into Thursday, we have GDP for the pound. Okay, that's going to be very interesting. And then we also have the initial jobless claims for the dollar, and we have PPI for the dollar, right? Also on Thursday, again, something that's going to be very interesting. Okay, PPI is another indicator of inflation, but it's from the producer standpoint, right? So that's going to be interesting to see how that comes out. And then on Friday, we end out the week with some retail sales and core retail sales for the U.S. dollar. So like I said, guys, starting off Wednesday, man, we're going to have a lot of fireworks in the markets, a lot of news getting released this week. I have my own thoughts and opinions as to how I think the market is going to react to these things. And I'm definitely trying to position myself early on in the week. Before Wednesday, I want to be in some positions before Wednesday. right? So that if we can get into some nice positions and we can hold it throughout the news event. If the news comes out how I wanted to or how I expected to, then yeah, those positions could, play out absolutely lovely, right? But we'll see what happens, man. We'll see how the market does end up coming out overall, though, family. But I am excited for sure. All right, but besides all that, we do have the young legend, young lion, Mr. Kyle, with us tonight as well. Shout out to you, my brother, for tuning in. If you are able to, definitely go ahead and just unmute yourself and say what's up to the family. And also, get ready to mark up some charts. If you do have anything you want to analyze as well, let me know, and you can obviously go ahead and take over the screen share as well. Give me 1 second,
Immediate
family.
small loss or an immediate big bag. That's why I like trading the news. I feel like, if you're more of a beginner, then, for sure it might be a little harder to trade the news. But alongside the right analysis, the right guidelines, the right rules, and the right risk to rewards, news trading can be very, very lucrative because you're either going to take a small loss very immediately or you're going to have a big bag very immediately. So, at the end of the day, as long as you're positioned the correct way, this should be a breeze week for you. And, I'm excited for this to be a breeze week for us here at the Profit Society.
hmm Yeah, no, I definitely think it's going to be a really good week as well. And I'm excited for it, man, because again, the CPI, especially from a fundamental standpoint, man, the type of events that are coming out this week can really give us an insight as to what we should be doing. So that's what I'm excited for overall. But let's take a quick look at the dollar and see what we got coming up here, guys. Overall, it's been a very interesting past couple weeks here for the dollar itself. Price has been doing pretty much what we've been wanting it to. Ever since we pretty much broke these lows right here, right? I've been saying, all right, we're probably going to eventually run, below this 102, 200 level, right? And price eventually did that. In fact, we even went lower, right? We even tapped into, this level of demand down here at these lows, and now this is pretty much where we're playing at now. And although the market itself is reacting off of a nice demand zone, there's still a lot of ways that we have to go before I'm truly confident in a potential, shift here, right? Because, if you guys look at this from a first standpoint, like I'm doing, right? I'm just coming to the markets, I say, for the first time, hypothetically, right? And I'm trying to figure out what the market is going to do. The first thing I do is, all right, cool. What is the current trend of the market? Overall, we have been very choppy, very bearish here. But now we actually got into a very strong demand zone. Second thing that I typically like to look for now, after I identify what the current flow is technically downtrend, at least for right now, right? Because we're creating these lower lows and these lower highs. The next thing that I like to look for is my key areas of supply and demand. All right, okay, we're in a major level of demand right here, right now. We also created another area of demand once price decided to leave this zone, right up in here, right? Another little minor area of demand. So we're starting to see demand build up. The next thing that I want to see as well, after I start to identify my areas of supply and demand, which I'll just highlight this as well, supply, is now I want to identify where my areas of liquidity are, right? Where do I think the market is going to go based off area of liquidity, right? So if I'm looking at the next possible move here, obviously we have above here a lot of inefficient price action, right? But we also have this resistance right here that's being formed right now, right? Not even just counting the imbalances or the inefficient price action, the FFGs or the fair value gaps, whatever you want to call it, right? We all see that. But we also see this resistance point, right? And the more times that we're stuck up here at this resistance, guess what traders are doing? They're making decisions, right? They're making decisions whether they want to look for sells or, whether they're looking for buys. But the more times we reject off of here, especially on the smaller time frame, the more likely it is for traders to want to favor that sell side, right? Because we're rejecting from these levels. So what does that really do? That starts to accumulate orders, and it starts to build up liquidity. All right, it starts to build up liquidity. So I do believe we have an area of liquidity above these highs still that we might want to go ahead and run into. Right? But we also have, in my opinion, even some liquidity inside of this little, demand zone down here. Right? I think Kyle likes to call this that hidden demand. All right? Right here inside of here. So
Yup.
now the question is, all right, cool. So we have potential liquidity up here. We have potential liquidity below this little bit of a support that's being created. What is the likelihood of these levels getting tested first or second or third? Right? Well, again, it's kind of hard to predict that, man. Like, we really just have to ride out price action, market structure to really tell us which one can go towards first. Like that. Right? So if I'm looking at this from the standpoint, I'm looking at all the momentum that we have here, right? Yeah, we tested into that area once, but I still think we have more ways to go, right? Before we even start to test back down to the downside. Again, this is just my opinion, by the way, right? But I think we do have, for the dollar, we're going to see more upside to start the week. And then once we start to go ahead and clear above this, what is this, the 102.04 level, then we can start looking for reasons to go ahead, come back down below the range. And then from there, I wouldn't be surprised if we actually ended up going back to the upside. Now, again, depending on what happens, obviously, with CPI this week, this obviously might not play out, all right? The market might just continue to drop aggressively or it might fly aggressively. But I'm playing based off of just strictly technicals without thinking about what the fundamental analysis could eventually become, right? Because the fundamentals can change off everything, all right? It can change everything. So from a technical perspective, I don't know. I think something like this looks very interesting, looks very attractive. I think this is going to be a trend line right here that we see a lot of traders will eventually look to take sells from. And although we could see a little bit of a sell-off off of it, I think that's only going to be building up more liquidity. All right, and if you guys understand more of a Wyckoff, or if you guys look at the market from a Wyckoff approach, you guys can see that this also does look like it's more so, accumulating, right? It's in the accumulation phase where we're building up orders, right? We started building up orders. The market runs these orders, captures all this stop losses here, and then we eventually shift to then go ahead and start to mark up. All right, it looks very interesting, right? Now, again, it's not fully confirmed, but it does look very interesting, right? So, although we are technically, again, for right now, still creating these lower lows and lower highs, I'm definitely anticipating a potential reversal here for the dollar to lead us back up into higher pricing, right? So, I did all of that just to tell you guys that, right? I think long term, at least for now, over the next week or two, we do start to see, the dollar gain some more momentum and start to buy up to the upside. All right, I just think there's a lot of liquidity now that we can go ahead and start to grab, right? Start to collect. So that's what I'm leaning towards, guys, for this week. Bullish dollar overall. I do think that this low right here is the spring of this entire range, and I think that this is going to hold. So yeah, I'll be looking to buy the dollar going into this week overall, right? So that's just my thoughts and opinions on the dollar right now. I'm interested to see what Kyle has to say, because Kyle, again, he likes to just stick with the trend no matter what's going on, right? And I'm pretty sure if he's probably going to stick with the trend, like, yeah, he's taking into consideration over here, all the structures to the left, the fact we're in a demand zone, but he also likes to just, respect structure. Right, and as long as structure is not broken, he's gonna ride out with it, right? So again, I'm not really sure what he's gonna say, but I'm just guessing. If I know my brother, I know usually how he's gonna approach it, right? But interested to see what you got to say with this, Kyle, bro. So if you don't mind, bro, take over, the screen share and mark up the DXY for us and let us know what your thoughts and opinions on the dollar are going into this week.
Yeah, for sure. I mean, you got it spot on. Until we go ahead and break this this 4 hour structure and whatnot. Um, as you guys can see, it's kind of like in
Hold
the
on, bro. Hold
middle
on. Give
of
me one sec. Give me one sec. Give me one second. Hey, make sure they can see you. All right, now you're good.
that. Um, so again, at the end of the day, we're kind of in the middle of, we're playing in between supply and demand zone. So, up here we could have said, this right here would have been your spring for a distribution, right? Clearly we swiped highs, even swiped here, and also we swiped right here. So, this right here could be valid for a distribution. Again, I do kind of see why Abel's looking at this being a spring, and it does look like it could be a valid spring. The thing is for me, I don't like to assume until I see it. So until I see that we break above here and then we can retest the top of this range, then I would probably be a bullish dollar. And I would probably take a trade right here because that would be the safest spot to take a trade. I feel like buying down here, yes, you probably will get some profit. It's not invalid starting the week off with a bullish dollar, but this candle right here really sticks out to me because this candle did swipe liquidity. That same supply candle that Abel was talking about, I would be playing this if we can get up there before Wednesday or even on Wednesday. If we can get up here before Wednesday or even on Wednesday, then yeah, I would be still playing this candle right here. I'm not gonna discount this. I'm not gonna look away from it. You can refine it actually to up here. So I would be playing this thing so small risk. Like, my stop losses on trades would be like 10 pip stop losses in order to go ahead and take this trade. So at the end of the day, position yourself correctly. If you position yourself correctly, you should be able to win no matter what happens. So, let's say tomorrow we get a spike up and then we get like a retrace right here. I would actually go ahead and play the long dollar because I like to hedge. That's one thing with me. I like to hedge my positions. So if I'm in an area where I know that the market is in a favorable position along, then I'll go ahead and do so. If I'm in a position where I know that, hey, I'm in profit on these longs, I'm not gonna marry the long bias. I'm gonna still look for positions in the opposite direction. So, really, I'm gonna really stick with this. I'm gonna stick with the dollar rebounding off of the supply and then coming down and taking out some of these equal lows. Because it's what the trend is giving us. You guys know me. I like to follow my 80 to 20 rule. So, this is a potential spring, but it's not a completed spring yet. It hasn't fully yet broken structure. It hasn't fully yet broken the top of this range. If it is a spring, then guess what? This would be the bottom of the range, and this would be the top of the range. And what do we know about Wyckoff? For you guys that do study Wyckoff, I'm gonna pull up a picture of Wyckoff accumulation, right? For you guys that know anything about Wyckoff, or for you guys that are studying Wyckoff, or if you guys that don't know what spring is, or you guys are hearing us throw this terminology all over the place about springs, selling climaxes, secondary tests, automatic reactions, all this type of things. Um, I want you guys to understand that there are different phases in Wyckoff, right? There's different terminology for different areas, but there's also different phases, right? So, at the start of an accumulation, we have our selling climax, then our automatic reaction, then our secondary test of that selling climax, and then we create, kind of like a fake spring, not a real spring, which is kind of what we got. Some people are probably trying to long here, and then we get our real spring, and we get a test, then we get some slow trading up. We create our LPS, And then the thing is with when you're trading Wyckoff, right? A lot of people try to guess the spring, and if you do guess the spring correctly, then you got an amazing swing trade that you need to hold for a very long time. But me personally, I don't like to guess the spring. Me personally, I like to only trade in phase D and E environments. What does that mean? In phase A, phase B, and phase C, again, this is phase A when we're just now starting the schematics, just now creating the selling climax. In phase B, we're creating another secondary test. So there's still not really a valid trade in phase A or phase B. And in phase C, I mean, if you can guess phase C right, then that's amazing. You got like the most picture perfect screenshot sniper entry at the bottom of the market. But me personally, I don't really care about the most screenshot entry. I don't care about catching the bottom of the market, the spring, all this type of stuff. Honestly, me personally, I feel like that kind of gets a lot of people into big losing streaks. Like when you're always trying to guess the bottom or the spring. Me personally, I like to trade only in phase D and E environments because we already have the confirmation that we've broken above the top of the range and we're playing the retest of the top of the range. Obviously, your trade may not be a wick entry, your trade may not be the bottom of the market, but you're playing the continuation, right? Up until then, you could have still caught sells right here. You could have still caught a sell in the phase B environment that broke the lows. Even phase C, like it was kind of like, yeah, you could have caught a trade, but how many times do you see the market do this right here and then it fails the spring and it doesn't actually give you that accumulation? That's why I like to wait until I see something going on in phase D or phase E because it's a lot less risky. It gives a lot more confirmation, and you're really you're really playing with a lot more confidence. So right now we're more so in a phase C environment. If this were to be an accumulation, it's more so a phase C. This right here would be phase A. This right here would be phase B. No, let me find that. So this right here would be phase A. This right here would be phase B. So I'll mark it phase A, phase B, and that's if this accumulation schematic does play out. This would be phase C. So now we're waiting for a potential phase D and E. If we can break above this range, which is possible, it's very, very possible. If we can break above this range and give us something like this, then I would finally go long dollar because it would give a lot more confirmation. It's actually the most accurate phase to be trading in the Wyckoff, the phase D and the phase E, because it's like if it fails this, then the schematic is basically dead, right? It's like it's probably not going to play out. But when you're trading in this phase C environment, what can actually happen is, we can come back down and create another spring and then potentially go up, which is a possibility. So, I'm not gonna like try to play this as the bottom. What I would do is, you know, I would continue to play the supply to the downside until it fails me. So until this fails me, this is my analysis. I'm looking at dollar shorts around the 102, 103 level. I would say more so 103. 103 level. And I'll be looking at that to continue to take the dollar to the downside. And again, don't marry the sell bias. You always want to have a possibility of the market going in another direction. So, let's say this candle does break, then I will be shifting biases, right? That's one thing with me. I'm not gonna marry a certain bias because the markets are forever changing. The market conditions are forever moving, are forever changing. So, um, again, me personally, I'm still looking at these dollar sells, and if we break above, then I would kind of use this area as a flip zone more so. You can kind of use this as just to retest the top of the range, and I would take something like this first. Risk to reward is crazy, like 1 to 19. And if not, then I'll probably take the same thing in the opposite direction. So regardless, we're gonna win this week. That's the thing. If you have a mindset like this, you don't marry a specific bias, and you have certain supply and demand zones marked up, and you can know how to use these supply and demand zones to work in your benefit regardless of the direction, then you will forever win. And that's my mentality. I like to continue in the trend that the market is giving me until it tells me otherwise. Because all of this can still just be counter trend. Until we break the top of the range, it's not shifted in market direction for me at all. But yeah, that's more so what I have on the dollar. Is we pretty much have more so the same zone marked up. It's just whether or not it'll break it or not. Me personally, again, I'm gonna be taking trades off of this, so don't forget about this level. Don't just be like, oh, it's gonna break, it's gonna break. Let me not take a trade off of it. No, I feel like the risk to reward is there to take a trade off of here. So I'm still gonna take a trade off of there, regardless of what happens or not. We can always just take it in the other direction. So, I would be definitely taking trades around there.
Yeah. Yeah. It's gonna be interesting to see what it does come out as, though. That's for sure.
Hey,
That's
yo,
for sure.
shout out to my guy George, man. Appreciate you, my brother. Yo, honestly, George, man, if you got any specific pairs or anything in specific you'd like to go over on this stream, feel free to drop it in the chat, man. Shout out to George, man, donating to the stream. Um, at the end of the day, bro, we really appreciate that. And again, you have first priority in anything you'd like to hear on this stream. So if you want to hear more about Wyckoff, you want to hear more about certain currency pairs that you're looking to trade this week, just know you got the first priority, my brother.
Mm-hmm. Yeah, now that's a fact. Let's see. So y'all trade the dollar or just pairs associated? So we obviously do not trade the dollar itself. We trade obviously the correlated pairs that are trading against the dollar. But we don't actually trade the DXY. No. Let's see. Gold. Yes. So, Kyle, you want to look at gold real quick, bro, and then I could look at a couple of ones I'm looking at as
Yeah,
well
yeah,
after.
let's definitely go back and forth. Um, Let me just clear everything.
Yeah, I'm gonna look at it as well as you do it. Come up with my bias.
See, like we're so close to here. It's so scary for me to want to take shorts on this thing. But now that I'm looking a little bit deeper, um, huh. Okay. All right, so personally, I'll be looking at this candle right here. This is more so my analysis on gold. Um, Once we can refine this a lot too. Uh, yeah, I want to refine this some more, but I don't think it's gonna come down all the way to here. But I'll give you guys two zones. I'm looking at this 4 hour candle right here. Maybe we can come a little bit more down swipe this liquidity right here. I think this is just liquidity that's being formed. And possibly if we can swipe that liquidity, take out some of the late buyers, and we can go ahead and start looking along from down here, and even possibly even all the way down here. But like maybe some of these trend line sellers right here got taken out of the market. I would say I would look more so in that direction, getting this liquidity get taken out. Once it does, then we can start looking long from over here. That's more so what I would be looking at on the gold itself. Pretty much correlates with my dollar bias. So it all depends on. See, the thing is, we're marking up charts here, but it all depends on where the dollar's at once we get there. So if we get there and the dollar already broke structure, then it's more so gonna look towards the other direction. But if we get in this area and the dollar is positioned correctly where we want it to see it in this little zone over here, then hell yeah, I'm taking longs all day. But it's hard for me to want to short this thing. The one thing that sticks out to me over here is there was some liquidity of maybe people trying to buy this little retest right here, and then the market came down and swiped that, and then mitigated truly off of the candle because it didn't actually mitigate the first time. It came very close to it, and then it created some liquidity for maybe early buyers, and then now it finally mitigated off of that. So if we're just following order flow here, I would look to see it react off of this 4-hour candle and possibly even all the way down to this 1-hour zone. So just watch how gold is starting to react around this zone, around 1960 to 1952. 1960 to 1952 is a great range to start looking for longs here on gold.
Hmm. Yeah, if we get down to that price point, then I also will be looking for longs down there. I'm super bullish gold. I'm not even gonna lie. Like I haven't been this bullish gold in a while. But gold has definitely been gaining a lot of strength over the past couple of weeks, just with all these other new issues that have been coming up on the horizon or so. So yeah, I'm definitely bullish as well, bro. And I actually, let me show you mine as well. Look how similar it is to yours. All right, so like me, my gold, or what I would like to see is very simple, man. I would like to see the market come and take away some of these dollar signs, right? Whenever you see dollar signs, this is what I'd like to say, liquidity. All right, but I would love to see the market either come below this 1970 level and then give us an opportunity to go back to the upside on. I'll definitely be taking some buys if we're able to, go ahead and get into this demand zone right here, right? This looks very interesting level for sure. If this doesn't hold, right, then I would be anticipating the market to come, honestly, probably a lot lower. Right now, I don't think it's gonna happen because I am extremely bullish gold. But we could see a deeper pullback. We might even see something a little bit deeper than what we, could anticipate. But I'm bullish this thing, man. So I'm gonna be looking to see how I can get into some nice long positions so I can hold for a while personally. Right, but yeah, I'm a big fan of buying below 1975. If we can get down below 1975, I will be actively looking for some opportunities to go long all day long. Target right back up to these highs. Right, like we're extremely, extremely close, family, to the all-time high price point of $2,076. Right, like this is all-time highs that we're testing right now. Right, all-time highs, not yearly highs, not monthly highs, not daily highs. All-time highs here. Right, once we break these highs here at above the 2078. Now we're in no man's land, right? Who knows how far gold is going to go? Who knows when it's going to end up stopping, right? Because again, we don't have no structure to help us identify where we can stop at now. So I'm very bullish gold. I don't see anything slowing the market from breaking these highs. And if we break these highs, man, then yeah, I think we have a decent way to go to the upside. Like the only thing that I could think of from a technical perspective, right? From a technical perspective that can give us some type of a resistance is if we were to go ahead and, test the top of this little channel line that we have here. Right now, obviously you can use tools like extensions, all right? Like you guys can use tools like extension tools if you wanted to try to figure out where this thing could stop at, but I don't see anything stopping this thing, family, once we do go ahead and break above these highs, right? Like at all. At all. So, we'll see. If I can get an entry on gold, man, I do plan on trying to hold it for, for a little while for sure. To see what the market can give us. Let's see what we got here. Still in that gold sell from last week, probably looking to hedge. Yeah, I mean, the sell is still looking valid for, again, another 200-300 pips, right? But once we're below 1975, I'm going to be looking for buys personally. Let's see. In shorts from 2016. Nice. That's a good catch. You mentioned, Abel, if CPI starts ticking down, we could be switching to risk on environment, but wouldn't it be questionable as the dollar could lose its position world reserve currency? Now, this is the thing about that whole dollar losing dominance talk, right? Is it losing dominance right now? Well, yeah, it's starting to waver a lot. But does that mean it's going to be completely taken over? No, not yet. All right, like in order for the U.S. to actually lose its title of the currency reserve of the world, there has to have a lot of things that have to go wrong for us to actually happen. Right, a lot of things have to happen for that to actually occur. Why? Because again, no matter what anybody says, no matter what any other country is doing, nobody feels more comfortable, right, with any other currency besides the dollar. Right, like the dollar's always been that. You can actually go with a dollar bill to a lot of these countries across the whole world, and they will accept that tender, right? They will accept the dollar as actual currency, where you can't do that with any other currency out there, right? So the faith in the U.S. dollar has been so dominant and so strong for decades and decades and decades, right? So for it to just completely stop out of nowhere, it's not going to happen that easily, right? If we ever do lose, which I do think at some point in time, obviously we are going to lose that title of the reserve, the currency reserve of the world, right? But if that was to happen, I don't see that in the upcoming future, right? Probably not for another 5-10 years, in my opinion, of course, right? I could be completely way off, but in my opinion, I don't think that that's anything that's going to happen within the next 5, 10, 15, 20 years, right? That's something that if it does happen, is going to be, far out, you could say. Right, but let's see. So the fear will remain. If anything, it will be worse than what we've seen in previous quarters. I mean, that's a good thought, Eric. It really is, bro. But yeah, I don't think anybody's too worried just yet. All right, let's see. Since gold broke through a symmetrical triangle in 1990, would you still expect it to drop to 1960, 50s? I currently see 1990 as a good buy opportunity, considering it's a good support. All right, yeah. I mean, let's look at that 1990 level, right? So I see what you're looking at here. You're probably looking at right back to previous levels of structure, right? So this is the 1990 right here. And, I mean, it could very well hold, right? That level could hold. I'm not going to say it can't, right? It could hold. But the reason why I'm a big fan of this level down here below this 1975 is because, I mean, more times than not, I've seen the market always want to go ahead and run through these little pauses right here, right? Like we had this little hesitation, this little pause in the market before we actually broke up. This little pause right here did what? It accumulated a lot of orders, and accumulated enough buy orders that it sent us flying up very aggressively. So what is below those levels, right? There's probably going to be a lot of sell orders or stop losses below this level. So if I am looking for another move to the upside, then I would probably want to see this entire area get liquidated first, right? So that I have the confidence in the move that I want to see. All right, so that's why I personally would like to see the market run this level before we actually go higher. Because too many traders are going to do exactly probably what you're looking at as well, right? Let me move this to the side. Right, where the market come right here, it can start to find some support, right? And it's going to find the support and build up liquidity. But then it's going to go ahead and run that liquidity, find the real demand, and then from there we make that move higher, right? This is probably what's actually going to happen if the market just doesn't run through it aggressively, right? We probably will stop at this level right here just to build up more liquidity. But then we're probably going to run it and then go ahead and make that move to the upside, right? So, again, that's just my opinion. I could be wrong, but, I've seen it happen so often that, I have confidence in this actually occurring. So, let's see what else we got here. In 10 years, maybe USD may get replaced, but not at the moment. Yeah, exactly. I'm with you, trade mate. I don't think it's going to happen within this decade. When in profit, swing trading, should a trader close partials or hold to TP? My trades go in profit 90 pips, but I see myself closing before the move completes. How would you approach? Excuse me. It really does depend on you as a trader. I know for me personally, I do not move anything. Like, I don't play around when it comes to my stop loss or take profits. Once those are set, the market is either going to stop loss or it's going to take profit, right? I really do not cut my winners ever short. I don't ever cut my winners short, unless market is just doing something real wacky, right? And unless price action is just, completely doing something I don't like, then I'll get out. But other than that, I let the trade play out, right? It's either going to stop loss or take profit, or it's going to break even if I move my stops to break even. But other than that, I let it actually play out. Again, I don't play around with it, this comes from experience because I used to struggle with that all the time, right? Where I would constantly be messing around with my stop loss, moving it, 20 pips to 50 pips because I'm trying to give the market room to breathe. And then I'll be moving my take profit levels, right, to make it fit. And it just never worked out in my favor, right? So now what I do is once I find my stop loss and take profit, I don't play around with it, right? It's either going to hit my stop loss or it's going to hit my take profit. Nothing else is going to come from that. All right, I'm not going to move my stop around. I'm not going to do none of that. I just have to accept the outcome once the actual, setup is finalized in my head. Okay? So that's how I personally like to approach it. I just let it play out completely. I hold. All right, so let's see. I like setting multiple TPs. Yeah, multiple TPs is always a good way as well to do it for sure. All right. Let's see. My point was the federal government spent 1.3 trillion more than it collected in 2022, which it doesn't make any sense. It's only a matter of time till the system collapse we've been running. Yeah, I definitely am with you, bro. There's probably a lot of stuff too that's happening in the background that, we're still not even aware of for sure. That's happening with this economy, But to say that we're losing our currency reserve status over that's kind of tough. That's kind of tricky, right? Because if we're bad, then there's a million other countries out there that are doing 1,000 times worse than us, right? So I definitely see what you're saying. I do believe other things will eventually break, right? We already had one crack with the banking system situation with SVB, right? What else is gonna crack, right? Who knows? I do think something else will crack, especially with unemployment and how the labor market truly is. Yeah, something's gonna eventually crack, man. But it's gonna be interesting to see how the market does play out overall. All right, that's for damn sure. All right, but overall, though,
Yo,
family,
good evening, bro. I'm
this is
here
what
if
I'll be
you
looking here for gold. Good evening, Skaggs. How are you doing, my brother?
good, bro. How you doing? How was your Sunday? How was your Easter?
Yeah, it's not going bad. Spent it with the family.
Yeah, nah, I feel you. I just got done with my little shenanigans here, so sorry I'm late, family.
Oh, you're good. You're good. Yeah, family. So this is what I'm personally gonna be looking at. The dollar's interesting. Gold is gonna be interesting. Still looking for long time bullishness on there. Euro USD is gonna be an interesting look as well. But I don't want to go over every single pair and just hog it all up. So Skaggs, bro, if you do have anything that you're interested in, Kyle, bro, if you have anything that you're interested in as well,
What was the
definitely let us know.
general consensus of dollar direction?
So for me, it really depends. I'm liking this area being a potential reversal zone for the dollar, and we at least see price go up to around the 103, 104. Now that's just predicting a reversal. Kyle just obviously wants to stick with the overall selling off of the market, so he's gonna look to short around 102, 500 or so. I'm thinking that we could be reversing here and going bullish a little bit.
Oh,
So they're kind of
okay.
mixed.
Yeah. I'm a dollar bull as well. I still remain positioned from last week on my stuff. So I'm bearish gold. I did come in and hear a few people talking about gold. I know a lot of people are looking at buys. Best of luck to you all. I remain short on gold. I remain short bias on EU. I remain short bias on Nasdaq. I remain short bias in a lot of places. To be quite honest with you guys. So,
Hmm.
I mean, that's pretty much my week. That's my perspective. I mean, a lot of my analysis is going to align with that.
Yeah.
I mean, what you have marked up could be a possibility. I don't think ultimately will play. There's too many people looking bullish, which is exactly why I look the other way. And again, I did come in on the conversation where you guys were talking a little bit about again, the dollar losing its currency reserve status and all the stuff that people are just overly scared about right now. And I think that has a lot of people getting suckered into, positions that are against the dollar. So just because we have these headlines, guys, remember again, like Abel said, it's at least 5 years out, right? You can make the debate for maybe 10, 15, 20, but at least five. Like you like nothing major is gonna happen. I mean, you might start to see a shift, but even then, it'll be on the back end of stuff. It won't really be affecting global markets like that. So I know a lot of you guys again still want to look for gold longs, and you guys know me, right? I'm over the past couple months, I've been more bullish on gold than probably a majority of people. However, the fact that now everybody is joining that train and everyone's like, "Oh man, gold's gonna go to all-time highs." That's exactly why I've begun to look the other way. And yeah, that little push up we had last week again, like on that 4 hour, like look at that hard 4 hour candle push out of the range. That's nonsense. There's no buying volume behind that. That's not legit buying. There's no major volume behind that. That's all gonna get erased. And we were actually short, right? The people that are in the premium community, shout out to y'all if you guys are still riding gold with me. We are short from basically what's 2028. So not quite the high, but very close to the high. So we are short from 2028. We have been targeting 1982. I'll probably be targeting much lower than 1982. I'll probably be looking to target, I don't know, probably where you have that liquidity area. I'm still looking for all that to get taken, that 920 area, that lower dollar sign that you have. Yeah. I'm still looking all the way down there. Obviously, it's going to be a journey. Obviously, that's not in the realm of this week. I mean, it could be, but it's incredibly unlikely. Um, so yeah, I'm still looking for all that to get slaughtered because once we break below those lows, that's when I know the vast majority of people will say, "Oh my God, the structure broke. It's bearish," and that's when I can buy again. So, yeah, that's what I'm looking at. All my analysis is the same though. I'm looking for that same type of pullback on EU, that same type of pullback on Nasdaq, possibly even crypto. So yeah, I'm a dollar bull for the week. That
Hmm.
sums me up very easily, I think.
Yeah. I mean, I'm definitely leaning towards dollar bullishness as well for the week. We'll see how that plays out. I don't
Yeah, I
know.
like that chart that you have, that little accumulation. Like that's I have to check that for myself to see if it's completely valid. But again, that probably pushes up to where Kyle maybe wants to sell. I don't know if Kyle will get the longer term reaction that he wants, but if you were gonna try to sell, obviously the extreme up there is the goal. But that's still so far away.
Yeah, nah, for sure. I don't know, bro. I think gold is gonna continue bullish though.
Yeah,
Not
I mean
not
again,
from.
that's the common consensus, so I
I mean,
have to
I'm
I
looking
will trade
for it
against
though.
it.
I would be looking for longs though again down here below 1970s. That's where I'm gonna be personally looking for some longs.
Yeah, I mean
Not.
that's a nice area. Don't get me wrong. Like
Yeah, nah,
I'm probably gonna
definitely.
take
Yeah.
some stabs with you down there too, bro. I'm definitely with it.
It's gonna be interesting
I
to
just
see,
think that
man.
even if we do get a bounce off of that, it'll probably just come up retest like 2010 and then
Yeah.
ultimately go back and take it out. Well, we should be able to once we clear that liquidity there, we should be able to get at least a bounce. I don't think we'll revisit the highs. I don't know. Maybe I'm wrong. I could always be wrong. We're forecasting out here a lot further than
Mhm.
than we need to on a Sunday. But
Yeah. Nah, we'll
yeah,
see.
generally I'm on the same idea.
Listen, man. We're gonna see, especially with major news coming up this week. It's gonna be interesting to see how the markets react to all this stuff.
Yeah, what do we have this week? CPI?
Yeah, we got CPI.
Did you have any specific thoughts on that? It is forecasted to drop by a decent amount there.
Yeah, that's what I said. I was like, if this actually comes out at 5.2, then that's gonna be insane.
Do you think it will? Is that your
I
are you with the market on that?
I'm never with the market to be honest with you. These guys are usually wrong for the most part, but I don't know. That's a big drop.
I'm calling 5.5.
Yeah, that's a big drop right there. I don't
Calling
know if we
five
come out at
five.
five
Oil is
two.
too high for that to come out at 5.2.
If we come out at 5.2, then the yeah, it's
Yeah,
gonna
that I
be
mean that'll
interesting.
be a catalyst to send the dollar bearish again. But
Oh,
I'm
100%.
pretty sure that's an overestimation. We should come out at about 5.5 in my opinion. Again, could I be wrong? It could also come out lower on the year to year, but maybe the month to month doesn't move too much. That's another possibility. Maybe we get continuous mixed data. That's like a worry of mine. But I'm pretty sure that 5.2 I'm pretty sure we're gonna miss that. I'm pretty sure that expectation is not what we're gonna get. Again,
Yeah.
I'm not again dumping billions of dollars into research into it like other institutions are, but I would bet that it comes out at about 5.5, maybe slightly lower at 5.4 if it wants to come close to expectations, maybe.
Yeah, now that 5.2 is crazy. If it does come out at 5.2 though, family, again, we're gonna be leaning towards risk on more than anything for the person that asked that question. How does CPI affect your bias? All right, depending on how the CPI comes out, I mean, it really does depend on current market conditions. I've been talking about this a lot because it's so important. Market conditions are completely different today than what they were 2 years ago. All right, so it really depends on the market condition that we're currently in. But overall, CPI can give us an insight as to what the Fed might actually end up doing based off of the release. Now, they're not just only looking at CPI. In fact, the Fed actually prefers the PCE inflation index better than CPI. But yeah, this can give us an insight as to whether they're going to remain, hawkish, dovish, if they're going to pause, right? Just gives an insight as to what they're planning on doing overall, what the Federal Reserve is going to plan on doing. And if you understand what they're going to do, then obviously you should understand what the currencies are going to do as well.
Yeah, I will warn people though. Remember, eyes on oil, family. With oil trading as high as it is now, even if that number does come out lower, the reality is the next CPI reading, whether it's gonna miss the expectations of that 5.2 because of oil this time around or next time around, oil will absolutely affect those inflation numbers. Again, remember, a higher oil means that CPI has a greater chance of either missing lower forecasts or that it will actually come out as an increase. Now, again, they're forecasting a pretty deep dip, which really tells me that CPI is not going to rise purely because of the off the backbone of oil. However, it does make me believe that we'll probably miss because oil still, again, hasn't given back any amount of the gap from the production cuts. So with oil remaining high, as you guys know, again, as I've said on the stream, or if you're new, you're gonna hear me say it now, but higher oil does make inflation a little bit tougher to combat because it does play a decent role in some of the numbers, right? There are CPI numbers, obviously, that exclude oil and energy as a whole, but the ones that don't will be widely affected by increases in oil. So just something to keep an eye on, right? So it's whether it's this result or the next one, as long as oil remains to trade higher, I will trade with the assumption that those CPI numbers are going to miss. And I mean, I've been doing that since the last week, so it's not really all my stuff is in alignments, right? It's not like I'm looking to execute off that stuff this week. I'm looking just to kind of ride out what I'm already in. But yeah, that's wraps up my thoughts on that.
Interesting. Yeah, it's going to be interesting to see, man, what the market does as well, for sure. But Kyle, let's see. Somebody had asked for your opinions on oil and GU. All right, shout out to that guy George once again, always showing love, always supporting the channel. We appreciate you, George, for sure.
Yeah,
So Kyle, bro, they want you to take a look at GU and oil.
for sure, for sure. Go ahead and switch the screen here. All right, so I'm actually gonna start off with GU first. Um, Let me just go ahead and remove everything here. Now, looking at GU, um, I'm gonna be honest. I'm actually leading a lot more towards the bearish side on GU because I like this candle so much that to be honest, we've been in a bearish trend for a long time here on GU. So to be honest, like you guys always hear from me, a lot of people may think that this is a spring, or might be thinking that's the bottom. But until we break above this level of structure, I'm still a long-term bear here on GU. I would need to see this break before I start looking at any long-term buys on GU.
Kyle, just to that's like 3,000 pips away, right?
Yep.
Okay. I was like, I hope you know he's on the monthly real quick.
Yep. I like to start off with the monthly because it gives me a better consensus on what's going on the bigger time frame. So, at the
Fair
end of the
enough, fair
day,
enough.
GU could really possibly rebound all the way up to here, to be honest. And that is a cool little 1,000 pips away. So, at the end of the day, until we break this, like once we break this candle, then I'll probably be like, you know what? I'll probably start taking this thing to the other side. But me personally, um, I don't like to assume that things are gonna break, right? Even though it may look as scary as possible, it may retrace up to 90% of the entire move. Until we retrace 100%, meaning we break that, we don't have the valid information enough to tell us that, hey,
Kyle, hold on. Give me 1 second, Kyle. Give me 1 second, bro. Hold on. Let's see. Yeah, all right. You should be good now, Kyle.
all right. So just going back off of what I was saying, I'm gonna kind of just recap over GU again. So, first things first, let's look at the monthly, right? What have we been doing for the past what? I would say almost 5 to 7 years now. We've been trading bearishly on GU. So, it only makes sense that long term we continue to look towards the sell side. Now, to be honest, we have two possible zones that we can start looking for these swing trades to the sell side. We have one up here, and we also have one right here, this little supply candle, right? And me personally, since we are in this bearish trend, I'm gonna be aggressively looking for the sells because I know long term that's where we're headed. Now, if we go ahead and refine it down to the weekly time frame, I always like to start off with the monthly, then I like to go down to the weekly. The weekly, we're trading into this nice little POI right here. We're trading nicely into this supply candle right here. And the weekly, last week, we spiked up into that candle and then created a wick to the downside. So personally, I feel like this thing could start trading to the downside towards the beginning of this week. And maybe it reacts from here and we just get a sharp spike down and then we can end the week off with like a bearish engulfing. I think this is like a do or die point for, the Bears. It either plays out right here off of this POI or, we break above and then, come tap into this higher imbalance range. But, me personally, especially with the positioning that we are in on the dollar, and I am looking bullish to start the week. I feel like we can get a reaction off of here, and then we can probably close the week as more so over engulfing. Me personally, I'm not going to be attempting anything as of right now, because I feel like we might get this wick fill. I feel like we will get this wick fill, and then we fill this wick, retest this candle one last time, and then we get that trading towards the downside. So what that would look like is, maybe we retest this. We kind of already tested it, but maybe come back up to spike that zone one last time because it barely just missed, right? So at the end of the day, if you were to ask me what I'm looking at on GU, I would more so be looking for this thing to probably just trade up one last time and then give us a nice move to the downside and end off the week bearishly. Especially with CPI, I feel like we can get some bearishness coming in. We filled inefficiency, so technically it doesn't have to test this daily candle. It doesn't really have to test all the way up here. We already filled all inefficient ranges. This was the last point where we had some buying before our major sell-off. So we came back up to fill that. Now that we are looking at the 4-hour, maybe we can get a test of this to take us down, or we get just one last spring to take us down. But nonetheless, I'm more so looking towards the bear side. Let's go ahead and look at the 1-hour here. If we look at the 1-hour, all of this price action is very efficient. So, personally, maybe you could look at something like this for London session, right? Let's say we can come up to here, spike back up into this range, or possibly kind of raid that liquidity and come up into this candle. I actually like this one a lot better. The fact that we could just come up into this range and then continue trading towards the downside. We have a lot of inefficiencies here in the 1-hour. So before I start looking the opposite direction, the positioning that we're at is more so favoring these GU sells. I'm more so favoring this region. Again, probably what we'll continue to do is we'll continue to consolidate, and then London will give you that spike up, and then we could start taking sells from this region. That's what I would do. Like for you guys that are trading GU tonight or tomorrow or Tuesday, if it comes up to there, I'll be taking a trade. I'm probably not even gonna look for lower time frame stuff because this is just very small risk. Like I probably just will be taking a stab because I know that the risk is like 15 to 20 pips, and all of this is very efficient. We officially are trading off of this, So, it's do or die right here. If it breaks this, then it's probably just gonna continue up, and then we'll get another sell, maybe possibly at the rate of these highs. But for now, I'm gonna stick with the bias that I have right here of this thing consolidating and spiking up into this little range, and then you could take a sell around there, and then we can come down and raid this liquidity that we generated, fill some of this imbalance right here. All of this needs to be filled before anything. I feel like the news will give us that fill. So you can get in positions in there before the news, or maybe like around the time of the news. Then that would be worthwhile. I feel like we'll get this towards the earlier part of the week, and we can keep trading towards this downside direction. So that's what I'm looking at here for GU. Again, once we spike up into that 1.2, 1.2437 or the 1.2447, this little 10 pip range right here, I would be taking shorts around this area to come and fill some of these inefficiencies. So, definitely keep a look at that on GU. That's what I'm looking at for my brother George. Next pair is US oil. Somebody asked in the chat, can we look at EU? Yeah, we'll look at that in a second. I'm just looking at oil. These were the pairs that my bro George requested. He did donate something to the stream, so he's getting first pick. If you guys, we never ask for donations. We don't really care. But just know if you do donate, whether it's $1 or $2 to the stream, we give you guys first priority because we know that you guys are supporting and showing love, regardless of the dollar amount. We take that into consideration. Just the fact that you guys are here and we're showing, it's showing that, you're really with us, that you're really locked in with us. So um for now, I'm just gonna keep looking at oil. Um, I'll say let me look at the monthly first. Yo, to be honest, I like longs on oil. Like I like oil to come up and break these highs right here. If you ask me, this right here is liquidity that needs to be ran. I want to see this. I want to see this thing go high, like higher. Yeah, I want to see this thing break this and potentially eventually break this. So I'm a bull. I'm a bull here on oil. Um, I want to hear Skag's opinion here in a few, but I'm more so a bull. I want to see these highs get taken, and I want to see these highs get taken. Obviously, if this high gets taken, then that's gonna be even more confirmation for us to come up and take this high. But for now, let's just focus on this. Um, when we look at the weekly, we came down and we mitigated off of this right here. Um, we've created more so like a liquidity spike. We created some trend line liquidity. Maybe people trying to buy this trend line right here, kept trying to attempt buys in that little trend line range. Maybe they saw this trend line, they're like, yo, I think it's gonna go up. And then we actually broke structure. So this is a valid accumulation. This right here is showing me valid spring. This is the top of the range, and we're retesting the top of the range. So if you ask me, I like to see oil continue up from even where it's at. But what we might get is we might get a fill of this. We might just get a fill of this inefficient range. Maybe fill that, or fill this right here, this little 4 hour candle. Um, but nonetheless, I like the retest of the top of this range. I like this thing to continue up. We just broke structure here on the 4 hour. Well, technically not really, because we didn't get a full breaking close above. On the daily, we kind of did. On the daily, we got that breaking close above. So, nonetheless, I'm looking bull on oil. It's either gonna react here, and if it does, then don't even stress it. Right now is not the best time to take a trade because we don't have the best risk to reward scenarios. So I would say more so if we can do something like this, I would continue to the upside. Or what we might actually end up doing is we might actually end up trading down to here and filling some of this. And then we can get our longs on oil. But nonetheless, I'm looking towards the long side. I'm looking really more towards the long side than anything. Um, you know, keep an eye out on this imbalance right here too. Personally, if I were to go ahead and take a trade that I want to swing, I would really take it off of that imbalance right there. Honestly, I wouldn't even buy up here. I'm only giving you guys a scenario if we break this high. Then yeah, I'll be taking that. But personally, I would actually just kind of want it to go down here. That would be a lot more picture perfect. But you guys know the markets aren't really picture perfect. Sometimes it quite certainly doesn't have to retrace, and it really just keeps going up. So that's why I'm giving you guys two possible scenarios here. Um, you know, this looks sweet, but I feel like it might even just swipe some of this liquidity here. So personally, I'm looking more so towards the long side. Um, if it breaks this high, then again, just continue with the trend. But if we break through down to here, then it's probably just gonna go lower and fill you in on some entries down there on something like this. So, keep an eye out on oil again. I'm favoring this entry down here because it is like the best risk to reward scenario. But nonetheless, we can get something like this as well. So, that's what I'm looking at. I do want you guys to also keep an eye out and don't like try to swing this thing forever. Like take partials and stuff because we do have the possibility of reacting off of here. So personally, again, this is more so my analysis on oil. These squiggly lines pan out a lot of the time, so keep an eye out on these zones. And then if we break above here, then that gives even more confirmation for the longs. But I like to take things day by day. I like to take things day by day for sure. Somebody said, "Yo, Kyle, you take a look at GBP." Yeah, of course, Eric. Got you, my bro. Melbourne, Australia. Sheesh. That's love, bro. You know the vibes. I love my Australians, man. I love that you guys are tuning in from Australia. I think also Alana is tuning in from Australia. There's a few of you guys from Australia, man. Always love for my Australians, man. I really appreciate that. I know it's like a different time right now. Maybe it's like in the morning for you guys. So, appreciate you always tuning into the stream, bro. Definitely stay tapped in. Definitely stay subscribed and turn on them notifications. We go live every Sunday, regardless. And at the end of the day, if you did want some more knowledge and even the possibility to trade live with us on our 8 a.m. New York sessions, then head over to profitsociety.co and register for a premium membership. That is something that I really suggest a lot of you guys doing if you want to trade live with us. So that's an option for you guys. GBP CAD. I'm gonna take a look at the monthly again. We didn't breaking close below, but again, this is in a similar scenario over here where I need to see a break before I look for any long-term buys. So, mm, mm, GBP CAD is just so, but nonetheless, I wanted to come up to here, man. Like, just being honest, I wanted to, like, I wanted to come up to this monthly candle. Um, I'm eyeing this. So if we look in the weekly, we have this as well. More imbalance. More imbalance that we need to fill before looking downside. But then again, we swipe liquidity. But still, like I'm gonna continue in the direction of the trend. So if you were to ask me what I'm doing on GBP CAD, I'm looking here. This right here is called hidden demand, right? And this right here is a very choppy sideways correction. Man, this looks like a good trade, bro. You might even want to get me into GBP CAD this week. I'm taking longs off of here with a 16 pip stop. Man, this is great risk to reward too. So, out of the pairs that we got here, again, Eric, bro, um, I'll be looking at longs on GBP CAD around this candle right here. I'll be playing this demand candle on GBP CAD. That's my outlook here. I mean, bro, like I'm be honest, like this looks like choppy sideways correction. I could be wrong. Like it could play towards the downside, but when has that ever when has that proven you correct? Like that, that is like it's like trying to guess a needle in a haystack. Like, let me see. Yeah, I mean, over here we had something like that. Like there's a lot of scenarios where you could have said this thing was going to the downside. Like over here, this looked nice. Us playing off of this. But guess what? It eventually came back down into demand and started trading up. So, at the end of the day, I'll just be looking for more trading to the upside here on GBP CAD. And I would be probably playing a candle right here. And what? It's what, like a 16, 17 pip risk? I would probably do the 20 pip risk just to give myself a little bit more room. I started doing that recently. So I'll say doing the 20 pip risk to the highs is 162 pips, which is a 1 to 8 scenario. So, if anybody is looking at GBP CAD and for my man Eric, I'll be looking at that right there. That candle is very, very spot on. And on top of that, we broke 1 hour structure. Like everything is looking great for the long side here. But yeah, that's more so what I'm looking at. We check the chat. Nas, please. Got you. What do you think about oil, Skags? I know I just went over oil,
There's
but
no trade on oil. I wouldn't be looking at it.
yeah, that's what I was thinking. It's so high up, I wouldn't be taking longs
Yeah, it
right
hasn't done anything. The news dropped the production cuts. It jumped $5. It's been rangy. There's no liquidity taken anywhere. I wouldn't be looking to trade it. So that's my expert opinion on it, family. Listen, I get a lot of times, we look at stuff and we try to force ideas and say, oh, if this happens, then we could do that and this and this and that and this. And it's like, I don't care. I look at oil, I don't see nothing on it, man. So I'm gonna just wait until she gets to a more appealing area for buyers or sellers, because where we at right now, it's just not it. Like, I was honestly expecting it to do something last week. The fact that it did nothing last week again brings me to the point that this week I'm gonna just do nothing with it. I'm not gonna force anything on it. So, like, I even took a look at the chart to see if there's anything I like. But again, with a $5 gap below, and you're sitting at like major supply, it's like, what are you really trying to do up there? There's looks like you're just trying to trade it just to trade it. The people selling it are chasing the gap. The people that are buying it are trying to chase the momentum, and both sides are just, really not progressing anywhere. So, yeah, man, oil, I wouldn't even. Just ask me after CPI when she does something. But yeah, as of right now, man, she in just no man's land. I'm not gonna analyze something that's very clearly, you know, stuck in a range that hasn't resolved itself.
Yeah, yeah. Um,
I would also say the same thing about GBP CAD here. Like, I wouldn't even, like, yeah, like it's the buy where you're looking at, but again, like there's not enough data to support either side. Um, and again, the only reason I'm really signaling out this pair again is because it's a CAD pair and it correlates with oil, right? So this is just showing you that the broader again, the broader markets, even affected by oil, haven't done anything. So for that reason, I'm on the sidelines.
Nice. Yeah, I I I agree, man. I agree. I agree. I'm not really taking any trades right now. I need to see more data. That's the thing. That's why we look at the markets every day. Not to take a trade every day, but to just stay updated on stuff every day because
Yeah, I would also say too, like, these Sunday calls, they're meant to set us up for the week. They're not meant to do hard analysis. I hate doing hard analysis on a Sunday. I hate looking at levels of like, oh, I would buy from here at this kind of stop loss. Like that's just you're just setting yourself up for failure because again, unless you're looking to execute on this day or near current price action, you looking at anything that's 40, 50 pips away, realistically, again, like it's good to be like, okay, yeah, if it comes down here, I'll take a look at it. But aside from that, man, like Sundays, they're really meant to just for you to get your head clear. Cool. How did the market open? Were there any interesting gaps? Was there any interesting weekend volatility? What are the news events coming up for the week? What are my major areas of liquidity? Am I trading in any major areas of liquidity? No. Cool. I'll come back when the markets are active. So like for me, like the whole Sunday thing again is more about just setting myself up for the week, looking at like broader areas, seeing again if there's anything that happened over the weekend and really just aligning myself with the news and and just seeing if there's anything that's maybe trading at some sort of random extreme on the Sunday. But I don't really like to go too deep with like, oh, if this could happen, then that, because you'll be here all night looking at stuff. I mean, you could do that at any time of the day, or you could just be like, oh, well, if this level gets taken, like they're just dealing in so much theory at a certain point. So I really like to keep it simple on Sundays. I like to just, look at the calendar, build up my fundamental plan, look at my major areas of liquidity for the week, and then, see if the market gets to that. But even when I identify my major areas of liquidity, I'm not really like saying, okay, cool, I'm gonna execute off of this because I don't know if I'm gonna execute off of that. I need to see what the volume looks like on the move up or down to that area. I need to see if any sort of breaks happen. I need to see if liquidity continues to build up early in the week. So yeah, man, I'm just chilling. Like I said, like my opinions before, I'm resuming my plan from last week, which means I have nothing new, right? Which means I'm looking again, trading the dollar bullish, trading gold bearish, trading EU bearish, trading GU bearish, oil I'm not touching, So like that's my very basic plan. I don't really have anything too far outside of that. And again, I know a lot of people on Sundays, man, you guys get stuck in that analysis paralysis. You guys set up these crazy trade ideas that all week you're gonna wait for. And sometimes that blinds you, man, because you're like, oh, I saw this on Sunday. I'm just waiting on this. I'm gonna wait 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 on this. And that's all you're doing. You're just waiting on this and waiting on this and waiting on this. Because you built up this fallacy in your head on Sunday, the market needed to do something. Whereas, I like to sit down, those Tuesday mornings or on the live trading sessions, and I'd say like, okay, let me see what we got now. So yeah, Sunday really for me again, like, it really just is market prep. I don't like to set up trades on Sundays. Um, I could talk all day about what could happen, and y'all know I love to do that too. But yeah, lately more and more, man, I've really just been trying to keep my Sundays as little in terms of like an actual bias as possible. Right. I like to look at liquidity on both sides. Okay, there's liquidity on the buy side here. There's liquidity on the sell side here. Let's see what happens when we reach one of those two areas. I no longer like to look for buys or sells on Sunday, unless again I'm reassessing positions from the previous week and or something is very specifically at a price point that I'm interested in. So can I look at EJ? Yeah, I guess I could look at EJ, and then I don't know if Abel is still here. If somebody can make me co-host, that'd be great. I'll look at EJ, but I don't really. I mean, EJ is not really something that I trade. I will, however, take a quick look, but
yeah.
it typically is not something I care to trade too much. All right, so let's see. Again, right? So I'm basically just looking for the week, where we can look at like in terms of liquidity. So I'm gonna ask myself, where's the most recent liquidity grab? Well, that's easy. We grab liquidity below this wick in this structure point, right? So we kind of traded into this pocket of liquidity. On the buy side, we haven't really captured any liquidity yet. Some people will make the argument that that grab liquidity, that's just more liquidity buildup. That's not going to warrant me a grab for me. So again, I'm going to trade away from the most recent liquidity grab to the most recent built up liquidity at a basic level. So naturally, I'm going to be looking for EJ to potentially pull up. Now, this is a daily chart, so again, like this would be the daily liquidity I'm looking at, but maybe there's something on lower time frames that we're missing. So let's just jump down to the 2 hour real quick. Again, you can maybe make the case that this actually did play up into a pocket of money, which is interesting. So the move down is kind of warranted. But still looking at this, man. Let me see here real quick. Interesting. Yeah, this just keeps grabbing like internal liquidity over and over and over and over. Technically, you have this check mark, and I use check marks to identify liquidity that has been taken. So that's been taken. This has been taken. So liquidity can now only live between these 2 points. And if liquidity is only living between these 2 points, you can make the argument that this was, up till just today, was the pending liquidity to get taken. So I'm still going to trade towards this daily level. But if you're going to make the assumption and be like, oh, well, you said trade away from recently grabbed liquidity and trade towards the untaken, you can make the case that, again, maybe this is taking liquidity, so maybe you find something in like the imbalance up here or some reason to come back down. But if I was looking at this for buy, again, because I want to trade into those daily levels, I would probably... Question is like, is this thing even going to pull back like that? Right. Yeah, again, I wouldn't want to say that this is the high of like tonight. It might work out that way. As we move into London session, again, maybe this does get away and we're not able to break above here specifically tonight. But if I was gonna buy this, I'd probably want to trade away from this, specifically this, but more or less again this, because this is like the only real liquidity buildup. And I'd probably want to kind of trade back into whatever this is, which Kyle is gonna call like hidden demand. There's probably some hidden demand down here. Really, all that means is that you just need to change the time frame a little bit to kind of see a little closer about what happened. And even then, that didn't really help us. So I probably, me being the greedy thing that I am in terms of entry price, there's really no time frame that looks good here though. The problem is like the more I look at this on like the lower time frames, like this wick, the liquidity inside of here never changes. So this never solidifies into anything that I think would actually produce a worthwhile buy. So unfortunately, I do have to say that Euro JP, I probably would expect this wick to fill out. So I would probably try to play inside of this like little pocket of money is where I ideally would want to play. Now, another thing that interests me and some people is going to be like this candle, like, oh, bro, isn't that an order block? Yeah, if you want to call it an order block, be my guest. I don't call it an order block. It doesn't have the specific characteristics that I would want to see. I would prefer to see this a little bit lower, but I can see why some people make the case for it. It's probably more of an order block than most candles I talk about like this, because it does sweep liquidity. It does close as an engulfing. It does close on significantly buyer volume, but obviously this is supported by some sort of fundamentals because this also happens at 8:30 in the morning. So yeah, this is also a news release. So I'm going to take that volume with a grain of salt because the volatility kicked up. and it really wasn't able to sustain itself afterwards. So again, some people are probably going to look at like something like this, and like maybe that's even something that like Kyle would normally look at. And you wouldn't be wrong for that. Again, maybe you do react off of this, maybe you do catch some pips off of that. But ideally, if I was going to swing it into that daily area up like past here, I would want to get like the best price that I could get. And on lower time frames, for me, unfortunately, again, it's like that 142.90 area, which I get, hey, it's the 170 pips away. But if you were interested in, again, like finding a trade up in here, maybe you wipe that during London. Again, this would be like something you again would like look at today. And that would be like a trade setup I would look at on EJ. But again, like I'd only be executing off this within my hours, within my time frame. Again, on Sunday, like there's really nothing here that interests me yet to pull the trigger to the downside. But if I was gonna look to buy, ideally, I'd want to see what happens down here. Do I push the button when it's at the extreme here? Maybe pending the volatility. If the first time we touch down here isn't the first time that we play in this price zone, then yeah, I'd probably take it. But if we just move aggressively into this price zone, I'm not going to take it just based off the price. I would want to obviously see some structure before we tap into that fully. But yeah, that's what I would look at on EJ from just the liquidity points for the week, right? So like when I go to the daily, right, I'm just gonna ask myself again, where does the liquidity lie? The liquidity does lie on the buy side. What's the best price that I could possibly get in to take advantage of that? For me, ideally, based on all the time frames, I would like down here, but there is a case that it does survive this pocket here as well. So yeah, that's how I would break that down, very quickly in terms of a Sunday. Obviously, though, when I'm trading this, or I wouldn't trade this pair, but if I was trading this throughout the week, I'd want to see, something happen inside of a time frame that makes more logistical sense than 10:41 p.m. on Sunday on Easter Sunday specifically. So yeah, that's my opinions on EJ. How long am I holding gold? I will keep people updated in the premium group if you guys are in the signal with me, just to show you guys the trade that we did take. We did go short on gold in this area up here. We didn't get the super cool sniper entry. This is not where we entered the market. We did enter the market inside this area here, and we held through that little retest. Our stop losses were up at like 2034, so the little pullback up into this area was fine. If anything, after that happened, we had more confirmation for our trade. So we are short from that 2028 area. Again, I was initially looking at us just coming down to this 1982. That's probably where we will book. Again, a little bit more partials because we did partial out of this already. But ultimately, I will extend my targets down to about 1934 for that swing trade. So the path for me on gold ends up at the end of the day. Again, like, do we rally from here? I don't know. Maybe I could care less with that, right? So then the first initial thing of like us taking this liquidity, who knows how we get down here, but I would like to see us do something like this. And you guys get the idea, right? I messed up at the end there, but again, that's my pathway on gold, which aligns again with my pathway again here on the DXY, which again you can see my longer term kind of analysis on the 4-hour and daily chart here. Again, this pushed a little lower than we wanted. It did eventually come grab this liquidity that we were talking about. So now, again, we're still looking for that dollar rally. So yeah, that's how I'm going to manage gold specifically, Jasper. But again, if you guys are in this with us from that 2028, which is a trade that we gave out in the premium live trade room, it's been going very, very, very well. Bank of Jan could always do something sketch. They're Night Riders. I mean, that's true too. But again, I can't I can't predict random movements by the Bank of Japan. I mean, if they're just gonna do something off schedule, but they do like to be doing stuff around this time of day. Who knows? Maybe they go and they, do some more QE or something. I would like a little rally so I can get back in. Yeah, if you're looking, I mean, if you're not in gold, if I mean, at this point, it's difficult. It's difficult to find an entry on this because again, like you have super efficient price action. This is all super efficient. There's really no imbalances that live inside of here. And I know the super critical people can be like, well, bro, what about this? There's an imbalance right there. Okay, yeah, cool. I feel you. But for the most part, this is very efficient price action, which is now, erasing really inefficient price action. So none of this stuff is gonna fill until we have, actual reason to do so. And like Abel said, you're probably not going to get legitimate reason to come back and fill any of that until you take out this little reaccumulation, right? Until you fill this wick down here. The buyers on gold are just kind of dreaming because there's just like, I don't know where you expect demand to come in anywhere inside of here. So, yeah, beautiful, beautiful trade. I do want to say, because I don't know if these boys have anything else, but of course, I want to leave y'all with a little bit of um value. So I did want to let you guys know that I did make some, and I plan on making a few more lessons from, and these are just basic lessons, but nonetheless, take advantage of all the free value that you guys can on the website. So if you guys do go to profitsociety.co, I did change the website around a lot. Super cool. You'll get all the information about what we offer. But if you come down here to where the actual education sessions are, I do want to let you guys know, man, come into this Fundamental Friday section. Take a peek at what we do. We go through any lessons that you guys see as these sample lessons. You don't even need an account to go through these. You can literally just, mooch the information off, enjoy that free little sample lesson. But these are sessions that we do each week. But I want to let you guys know that I did mark some of these as samples to give you guys here on YouTube some value as well as we continue to expand this stuff out into some more of the advanced stuff. So again, you guys can just click on this. The video will load right up. Again, I'm not signed in or anything fancy like that. So that will be able to give you guys access for that. But we have the Mindset Monday, Technical Tuesday, and Fundamental Friday. So keep an eye out for those sample sessions as well. Let me just tick back to charts here. But yeah, I don't see any sort of re-entry on gold, Alana. We'll look for that in the premium though. You already know. We'll take a look at this on Tuesday, Wednesday for CPI, and we'll find the entries there.
Oh yeah.
But yep, that's all I really have, family. Abel, I don't know if you want to wrap it up with anything specifically, but I definitely love and appreciate y'all, and I'll see you guys on the inside or in the Discord if y'all gonna chill in the community and chat there. Love and appreciate y'all, family. Abel, it's all on you, man.
Yeah, for sure. Now, we definitely appreciate every single one of you guys showing up tonight, family. I hope everybody has a phenomenal trading week overall. If you guys are a part of the Profit Society Premium, then make sure to show up this entire week, family, because we got a lot in store for the week, a lot to talk about, a lot to go over, and just a lot to obviously, communicate back and forth with you guys on. But besides that, we appreciate y'all. We love you guys. Thank you guys for rocking with us, and we'll talk to you guys all a little bit later. Let's get it. Have a great one, y'all.